Welcome back to Alpha Recap. I'm glad you could join us. We're wrapping up today's market action with a quick, readable recap of where the tape landed. As always, if you have questions, you can reach us at stockalpha.ai.
Thanks for having me. Excited to dig into a pretty patchwork day. Some clear winners and some noisy laggards.
So markets were closed for the day and we're talking after the bell. But the story was very much about energy tightening, AI headlines in tech, and pockets of strength in materials and industrials. So, what really stands out here is how concentrated the moves were.
Yeah, absolutely. The headline was Energy, a mix of geopolitical chatter and some inventory draws that nudged crude back toward $100 a barrel. That tightened the whole oil complex and then spilled over into miners and industrial suppliers.
Right. And when you say nudged, Brent actually hovered just under $100 a barrel. That's the number that changed the tone for a lot of cyclicals today.
Exactly. When crude moves into that range, it's not just an oil story. It becomes a capex and logistics story. Miners think about higher metal prices. Pipeline firms and storage names come back into focus.
Mm-hmm.
And I mean, when you step back and look at this, you see materials and industrials outperforming because there were concrete project announcements, new smelters, copper joint ventures, rare earth supply pivots. That kind of news makes investors update the supply outlook.
Quick reactions. Energy, materials, and industrials led. Technology and utilities were mixed winners. And at the other end, cannabis, crypto, and parts of real estate lagged. Honest take, Aidan?
Honest take. Analysts note a selective rotation. Money moved toward sectors tied to physical supply and long horizon capex, and away from names that carry policy or litigation risk.
Let's dig into energy first. You mentioned geopolitical moves and inventory draws. What was the market reaction and why did it matter beyond oil prices?
What moved markets was a reported cut in production from Iran and U.S. weekly data showing crude draws. That compressed spare capacity in a market that already feels tight. The implication was immediate. Higher incentives to accelerate drilling, push supply chains, and think about storage and transport premiums.
And company headlines supported that. Big producers reported beats and discoveries. Shell and Eni were called out, which helped sentiment in the sector.
Right, and analysts note that marginal supply moves in a low spare capacity market get amplified. So even modest production changes can swing prices and capex signaling.
Clear. Moving to materials and mining, you mentioned World Bank forecasts and rare earth pivots. How did that translate into market action?
Materials had good news flow. Policy pushes for domestic and allied sourcing, smelter announcements, copper tailings joint ventures. Basically, a lot of items that suggest higher volumes and firmer prices down the road. The market rewarded names with tangible resource exposure.
Right. And that's why industrials got a lift too. Because a lot of that activity needs construction, robotics, rail links, and other heavy inputs.
Exactly. Permitting reform and faster logistics like Mexico rail links, plus robotics and data center buildouts, all supported industrials and suppliers.
Okay, time for a short theme check. Electrification and data centers came up a lot. Give us the easy version of why those two connect so tightly with utilities and tech.
Simple version, more AI and more compute equals more power demand. Utilities are commissioning large battery projects to manage intermittency, and tech firms are locking in power with corporate power purchase agreements. So you get cross-sector demand for transformers, cables, semiconductors, and construction.
And we had some big, specific examples today. Clearway commissioned a battery center of about 320 megawatts, and EDP Renewables signed a corporate power deal for about 250 megawatts with Meta. Those are measurable items that matter to supply chains.
Those projects are signals that storage and corporate offtake aren't theoretical. They are translating into capital spending and interconnection activity that feed industrials and materials demand.
Tech and AI. It felt like momentum, but also caution. What was the balance?
We saw new consumer AI releases and large chip capex plans, and even softer regulatory language from the European side that encouraged investment. But IPO noise and supply chain chatter kept gains measured. In short, momentum indicates expanding compute demand, but regulatory appetite and execution risk still moderate upside.
Right. And the other thing is that the market is starting to separate companies that control cloud and compute stacks from those more exposed to content and ad cycles.
Exactly. Winners are those with integrated cloud and compute control because they capture more of the economics when model deployment scales up.
Short reaction.
Right.
Let's talk about the downside groups. Cannabis had a mixed day. Policy versus litigation. Walk us through that tension.
Cannabis is a classic policy-sensitive sector. On one hand, state legalization and mainstream retail moves, like new hemp beverages showing up in big chains, push the addressable market wider. On the other hand, new class action suits against major multi-state operators create legal overhangs. So the same headlines that could be upside are offset by litigation risk.
Not a great day for clarity there.
No, and analysts note that until federal clarity improves, valuations will keep a premium for policy and legal risk.
Crypto was also mixed. Institutional flows, but security and minor concerns. What did you make of that?
There's a real tug of war. Spot Bitcoin ETF inflows and custody expansions by big banks point to maturing institutional demand. But commentary from macro strategists calling it a speculative trade, minor stress, and occasional security incidents keep volatility high. So the net was mixed: structural demand plus idiosyncratic execution and security risk.
Short reactions, quick takes. Real estate. Troubling signs in the housing and mortgage vintage data.
Yes, surveys showed homeowners were staying put and renovating, reducing transaction volumes. At the same time, mortgage vintage risk in multifamily and higher FHA delinquency readings were flagged. That combination pressures transaction-oriented businesses and lenders with vintage concentration.
Healthcare was another mixed bag. Innovation and M&A appetite, but execution risk. Any specifics?
We saw new diagnostics and immunotherapy updates and a big rare disease buyout that kept M&A appetite alive. But there were also stumbles, a notable execution hit at Sarepta, which reminded everyone that single asset risk can move day outcomes sharply.
Okay, quick checklist. Energy tightened and fed cyclicals. Electrification and data centers linked utilities, industrials, and tech. AI momentum broadened, but regulation moderated. Crypto saw institutional adoption offset by security. Cannabis and real estate were policy and litigation sensitive. Anything to add before we pull this together?
One more thing. The market was rewarding clarity of cash flow and durable demand, and penalizing idiosyncratic policy or execution risk. That theme cut across everything we just said.
Good framing. Let's offer listeners a few practical watch points. Informational only, not advice.
First, monitor energy inventories and any OPEC or EIA commentary. With Brent around $100 a barrel, the potential for near-term volatility is elevated. Second, track battery project pipelines and corporate PPA announcements. The Clearway and EDP meta items are not one-offs. Third, watch critical minerals policy and rare earth supply news. Tariff or subsidy shifts will move the materials complex.
Fourth,
Separate AI winners from regulatory execution exposure. Keep an eye on big tech capex signals and EU rulemaking. Fifth, for crypto, Compare ETF flow metrics with custody and security incident reports. And finally, follow legislative calendars and high-profile lawsuits in cannabis and healthcare, because policy and litigation can re-rate those sectors quickly.
Those are useful guardrails. Quick reactions, wrap-ups.
Yeah, that tracks.
And honestly, I was a bit surprised by how much of the market moved on measurable project news, batteries and PPAs, discoveries and smelter plans, rather than pure sentiment.
Same here. Tangible capacity additions give the market something to hang a forecast on, and that helps explain why certain cyclicals outperform today.
All right, key takeaways before we go.
1. Energy tightness rewired near-term expectations and helps cyclicals. 2. Electrification and AI are creating a multi-sector growth corridor that's showing up as real projects and PPAs. 3. Institutional adoption in crypto is real, but security and minor risks produce dispersion. And 4. Sectors exposed to policy, litigation, or single asset execution, think cannabis, parts of healthcare, and some real estate niches, remain high news and high volatility.
Quick final note. This conversation is for informational purposes only. Analysts note market conditions can change rapidly, and this is not personalized investment advice.
Right. No recommendations here, just analysis and data to help listeners think about where risks and opportunities are concentrating.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly, and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening. Catch us next time on Alpha Recap.
Thanks. Great conversation. See you next episode.